What's up, people? Thanks for tapping in. It's Kenneth here, streamhomeloan.com. All right, so I'm re-recording this right now. I just talked for like 30 minutes, and then towards the end, it was just turned to gibberish. So I'm gonna try to make this short and concise. The purpose of this video is really just to give you an overview of what a loan estimate is, and what closing costs are, whether you are a loan officer, a real estate agent, or a client looking to kind of have an understanding of what fees you could expect in a transaction, right? So this is a loan estimate. As you can see, with the low interest rate of 3.375, this is something I pulled up just randomly on my computer, old file, and it was a refinance I did a couple years back. So the rates were obviously wonderful. I blanked out a bunch of the information just to keep it, private, obviously, and I removed all the lender information as well, so you don't see loan numbers and things like that. The purpose, like I said, is really just to give a understanding of an idea of what fees are, and a little bit of information so you kind of don't go in blind when you start to dive a little bit further into this. So this is the first page of a loan estimate that's going to show you the loan amount, the general terms of the transaction, the purchase price, or sorry, the principal and interest payment, answer some basic questions. So let's just run down that really quickly. So here you would see the date issue, the applicant's name, property address, estimated property value. This is the loan term. It's a 30-year term. It's a refinance. Refinance is the purpose of the transaction. The product is a fixed product, and the loan type is a conventional loan. At this point, we hadn't locked the interest rate yet. This is where you would see the loan number. Okay, so we have the loan amount. Can this amount increase after closing? No. Interest rate, 3.375. Can this amount increase after closing? No. So obviously this loan estimate takes that additional step to, for consumer protection, asking general questions and then answering them so that a client can see this basic information and know what's going on with their loan transaction. Shows you here principal and interest payment. Is there a prepayment penalty? No. Balloon payment? No. Then it gives you a breakdown of the total monthly payment. So has the principal and interest payment that was already identified here, escrow portion of the payment, which is the portion of the payment that goes towards your property taxes and your homeowner's insurance. $453 in this scenario gives you a total payment of $2,080, right? Next section breaks down what's included in that escrow payment of $453. Here it shows that it's property taxes and homeowner's insurance. It asks the question again, in escrow? Yes, right? Because in a scenario where they are not including your property taxes and insurance, you're still going to see it here because it's broken down as a, your taxes and insurance are broken down as a monthly payment for qualifying purposes. So it's still going to be disclosed here through that, with the monthly payment. But then here it would say no if it wasn't included in the monthly payment, even though it shows in the breakdown. But in this situation, it is included in the monthly payment. Okay, total closing costs in this scenario, $11,206, includes $88.85 of loan costs plus $23.21 in other costs, which other costs are going to be like your prepaid taxes and insurance and your government recording fees, but that gets broken down on page 2. And then here, estimated cash to close. So as you see, it says estimated cash to close $18,000, but then it shows to borrower, right? So that means that the borrower is going to actually be receiving money at closing, as opposed to a scenario where the borrower is going to be bringing money to closing. So in this transaction, this is a refinance transaction. It's a cash out scenario where we did a loan higher than the balance that he owed, so that the person can walk away with the difference, getting that cash out. And obviously we increased the balance or the new loan enough to cover the closing costs and still attain the amount that they were looking for. So once again, $18,000 in this scenario shows that it's going to borrower after closing. Okay, so this is page 2 of the loan estimate. So once again, this is a refinance transaction. Section A of a loan estimate is going to break down the origination charges. In this scenario, there was 0.313 of discount points, meaning that based on the rate that we selected for this client, it came with a cost 0.313. So I don't know the exact rates from this scenario, like outside of the rate we selected, but likely if we would have went with the higher interest rate, there wouldn't have been that discount cost, or maybe the discount would have been reduced, or you can go to a, possibly an even higher interest rate and not have a discount at all. So once again, the discount cost, the 0.313, is related to the interest rate. Originator compensation is, in certain scenarios, we are charging what's called borrower paid compensation. We're charging the borrower upfront a flat fee or a percentage as our compensation in the transaction. Other times we're doing what's called lender paid compensation, where we're getting paid a predetermined amount or predetermined percentage, and it's coming in the form of like yield spread or rebate. It's not being charged upfront as an origination charge to the client. It's basically coming from a built-in rebate based off of a selected interest rate. So we can have a whole conversation based on that, but Section A is going to cover your origination charges as well as your underwriting fee or your lender fee. So every lender that I work with has either an underwriting fee or a lender fee, and it's pretty much the same thing. It's their flat fee charge for the transaction. They just label it differently a lot of times. Okay, so those items would be in Section A. Section B is going to be things that a client cannot shop for, meaning that they can't go out and find their own appraiser, they can't order their own credit report and use that in the loan transaction. They can't pay for their own flood certification, and they can't pay for their own tax service. Okay, so those fees right there are fees that you're going to pretty much see every single time, unless for some reason there's not a requirement to do a flood certification, but we do that on every single transaction. And the fee is usually nominal, $8. And for tax service, basically verifying the actual tax rate on the property, fees roughly about $85. Could vary depending on what company is pulling that service or what the lender charges for that service. Okay, so that section's there, and then you have Section C. This is going to be your title escrow related third-party charges. Your courier fee shows right here, $65. A courier fee is basically your fee for, like shipping a package, or basically shipping a package or moving some sort of documents back and forth. And depending on what lender system you're using, it might say just like courier fee, it might say messenger fee, like right here it says messenger or carrier fee, or it might say courier or wire fee, because I guess it can be categorized a little bit differently depending on who, depending on what they are trying to apply that to. So for one, I know that it can go towards like a messenger fee, like FedEx or OnTrack, someone that's going to move a document from the lender to the escrow company overnight or in the same day, as well as them using this same exact title for a wire in the transaction. Maybe it's a wire from the warehouse line to the escrow company or to the title company. But what you're going to do is at the start of every transaction, you're going to get a fee list or a settlement fee sheet from your escrow company that's going to tell you what their fees are. And all you're going to do is go into your lender system and look at your settlement sheet and say, okay, let me select this fee and make sure that you're disclosing it, right? So if they have a fee like this one, this endorsement fee is actually only $90. But let me go back here. It's actually only $90. It was a typo there. But I don't, like the endorsement fee, I don't understand 1,000% exactly what that fee means for the escrow company, but it's something that they charge. It's part of their processes. And my goal and what I need to do is disclose it accurately to my client so that later on I'm not getting hit with a tolerance cure because that fee is being charged and we didn't disclose it properly. All right, so remember, this endorsement fee, not $900 by any stretch of the imagination. It's $90. This was a typo. Then you have your carrier fee, messenger fee, once again, like a FedEx or some sort of document moving company. Mobile notary fee. So if you are doing a refinance transaction, you are likely going to have a mobile notary get emailed a set of documents from a title or escrow company, and then they're going to bring those documents to go meet up with the client somewhere and sign the documents. Usually it's going to be at the client's home. If it's a purchase transaction, a lot of times you're going to have the buyers or the borrowers go to the escrow company to close the transaction out, sit down and sign the documents. So it varies depending on, how the escrow company operates. It varies on, if the clients have the availability to get off of work to go do the signing. But that mobile notary fee is mainly going to be there on refinance transactions. Even though on a purchase transaction where you go to the office, they're still going to charge you a notary fee, but it may not be as high, and it won't be categorized as a mobile notary fee. Okay, premium for lenders coverage. This is title insurance. So different lenders, like I said, in their system, when you're selecting fees, so that you can create your loan estimate and send out your disclosures, one lender might call it premium for lenders coverage. One might call it title insurance. One might call it title policy. It's the same thing. But what you want to do is make sure that whatever's on the settlement statement from your escrow company, as what they estimate the fee to be, you're disclosing it. Okay. So just so you know, title insurance is basically the title policy that you're ordering, that's going to document the chain of title on the property and tell you if there's any liens, judgments, who is on title of the property. Are there any loans that need to be subordinated, like some sort of a lease related to a solar panel, things like that. It's very important to get a premium or a title policy, and it is a requirement. Okay, so recording fee, this is just one of the, this is a title recording fee. Settlement or closing, this is the escrow company, the third party that, sends out wires and coordinates payoffs, orders titles, and, basically like the central back end company that makes sure that, everything is where it needs to be, pays real estate agents, pays brokers, sends out checks to pay off credit cards and transactions where you're paying off debt, things like that. So it's a third party, entity that is, handling the back end of the transaction from a closing standpoint. Okay. And I think I mentioned this earlier, on a refinance transaction, you're going to be using, or I don't think I mentioned this earlier, but on a refinance transaction, you're going to be using an escrow company that you select. Right. I always use the same escrow company on a refinance transaction, just based on relationship, comfort, experience, and I just always use the same escrow company. On a purchase transaction, I am required to use the escrow company that the seller selects. So purchase transaction, seller selects the escrow company. At the start of the transaction, I contact the escrow company and request a list of their fees so that I can then put them into my loan origination software and disclose them to the client. Okay, and then you have sub escrow fee. This is another fee that, maybe one escrow company has a sub escrow fee, submission to escrow fee, and maybe one escrow company doesn't charge that. So this is like, it's a nominal fee that is related to an individual company's processes, right? So this would really be what you would consider like your closing fees, right? These are all fees, whether it's your discount points, whether it's a fee to the originator of the transaction, whether it's underwriting fee, appraisal, credit report. These are all actual fees. On the other side of it, you have recording fees. That's a fee, obviously, but it's not a fee that you're paying to some third party. This is a recording fee that you're paying to the county, right? So when you're here, taxes and government fees, this is recording fees going to the county. Or if you have a transfer tax in your state or city, this is where that's going to be documented. Prepaids, homeowners insurance, prepaid. Whenever you refinance a transaction, if your homeowners insurance full bill is due within 60 days, they're going to require you to pay the full policy. On a purchase transaction, when you're closing, you're going to be required to pay 1 year, the full policy up front. So this section shows you the things that are being required to be paid at closing, like up front. So, prepaid, they want you to prepay that 12 months of homeowners insurance. So in this scenario, his homeowners insurance must have been coming due within 12 months. So we had to pay the full policy up front. Go back there. Okay. So remember that these are prepaid items. So even though it's homeowners insurance, this is not your escrow account just yet. These are just things that at closing are already going to be due. Okay. All right. So prepaid homeowners insurance, and then you have prepaid per diem interest. So basically between the day that you close the loan and the end of the month, you're going to have to collect per diem interest. The reason is because after you close, you're always going to skip a month's payment. And mortgage interest is paid in arrears. So that month payment that you're skipping is not going to be paying the insurance or the interest that was due from the previous 30-day cycle. So that once again, that's a whole nother little video breakdown, but basically this section has your prepaid interest and your prepaid homeowners insurance, or if there was some sort of county property taxes that were coming due at that time, you would have to pay that at that time. Now, the initial escrow payment at closing is what is being accumulated to establish the escrow account, right? So if your homeowner's insurance is, $1,188 for the year, that breaks down to $99 a month. Depending on when that homeowner's insurance is due, the lender is going to say, okay, we require you to start off this escrow account with 1 month, 2 months, 3 months, whatever that number is, so that when that time comes around, we have the amount that we need to pay your homeowner's insurance on time. Same thing for the property taxes. If your property taxes are due, 4 months from now, but in that time frame, the lender's only going to actually receive, 2, maybe 3 payments before they send off your payment, then they're going to accumulate, or they're going to require your escrow account to be started with a certain amount to ensure that when it's time, they have the right amount in your escrow account, right? So as you go through this, what it does is it starts to add these numbers up for you so that you can have a clear picture of what your closing costs are. So on this section, you have A, B, C. It adds them up here, total of $8,885 as your actual loan costs. On this side, they consider this your other, your prepaid taxes and insurance, your government recording fees, your initial escrow payment or initial escrow deposit. Those things, E plus F plus G plus H, add up to $2,321, right? So keep in mind this, right? So when we are, let's go here real quick, grab my calculator. When we are looking at, this full number of 8,885, I want you to keep in mind, normally I would say, like, when you think of just like actual loan fees are really going to be somewhere around the $3,500 mark, right? But when you have origination costs or discount points, that's where you're going to see your loan fees go up. So when we say loan fees are probably more so around $2,300, or sorry, $3,500 or so, let's just look at it. If we have the underwriting fee, which is likely always going to be there in some way, shape, or form, plus this right here, $683, plus $2,395. $4,133. But remember, this right here, this $900 was incorrect. That should only be $90. So let's take off $810. So your actual fees, roughly about $3,323, if you don't have an origination charge or a discount point. And keep in mind, those things are there for a reason, right? Like if you have a lower credit score, then the company that's working with you may not be able to make their compensation from yield spread. So they end up charging you an origination charge. Or if you have a lower credit score, your interest rate, the rate that you select may come with some sort of a discount because of pricing adjustments based on your credit score. So that's the reason why those things vary. So, a lot of times, like, it's a loaded question if a client asks you, hey, well, what are your fees? I'm like, well, generally speaking, fees on a transaction are going to be somewhere around $3,400. But depending on your scenario, it could be higher or they could be lower. It could be lower if I'm able to give you a lender credit or something like that. But that is that. So yeah, so that breaks down, what actual fees are. The way it works is that upfront on a loan transaction, as a loan officer, when we send out our initial disclosures, we're going to send out a loan estimate. This is, what we've accumulated from, selecting your interest rate, knowing what the discount costs are, knowing what origination charges, if any, are going to be there, knowing what the estimated appraisal fee and credit report fee, all those things, knowing what our escrow, fees are, and putting that all into one document. We disclose that to you up front, so that you can review them as you sign your loan disclosures. I always tell my clients, hey, look, once you receive your loan disclosures, give me a call. We'll go over this line for line so that you have a clear understanding of what these are, right? So once the client signs this, that allows you to take the next step of ordering the appraisal. So prior to closing, let's say that, you do this on day one, they receive their loan estimate, they receive their disclosures, you move forward throughout the process. What you're going to do is, as you get closer to closing, as the loan approval is complete, as you start to move closer to closing, you are going to request a settlement statement or an updated settlement statement from escrow. So this updated settlement statement should have the accurate fee for the appraisal. At that point, you would have turned in an invoice for your credit report. So if your credit report is exactly the same, then great. Or if it's higher or lower, that invoice will reflect it, and then that'll be disclosed on the closing disclosure. So prior to you being able to close, you're going to have to send out a updated final version of this called the closing disclosure that reflects what the final fees came in at. When you're looking at fees, title charges, services you can shop for, there's a small tolerance that's allowed there, right? Like there's a 10% tolerance that can be allowed. And as a loan officer, you're not going to get hit for that. But if it goes outside of that, it triggers what's called a tolerance cure. So once again, that's something that we can dive into a little bit more later on. But I just really want to give someone, like I said, people on both sides of the fence, whether you are a buyer or a current owner looking to refinance or someone looking to purchase, a good understanding of what your fees are. This is it, right? Like I said, these things will vary. Your origination charges, your discount charges will vary. Your underwriting fee or your lender fee will likely be somewhere around $1,000. Sometimes higher, sometimes higher, rarely lower. And these fees are pretty standard. Once again, the main thing that you're going to see a big difference from a refinance to a purchase transaction is going to be this settlement fee, the escrow charge. And this scenario was based on a $368,000 loan. It's I don't want to say a small loan, but in California, I would say the average is probably closer to $500,000 or so. But for this particular loan amount, if this was a purchase transaction, I would think that the escrow fee, instead of being $550 on a refinance, would probably be closer to $1,700 to $2,100 for the same service. And I trust my escrow company. I've worked with them for years. I know that there's a reason why there's a difference in that fee. It must be within the processes that happen in a purchase transaction. I'm not exactly certain, but there is a difference between the fee for escrow company on a refinance versus a purchase transaction. But that's really it. Most of the other things are going to be very similar from a refinance to a purchase. So you can look at this and say, okay, hey, if I'm doing a refinance transaction, generally speaking, my fees are probably going to be about $3,300, $3,400. If my scenario calls for a discount point because I want to get a lower interest rate, or because maybe my credit scores are, putting pricing adjustments in there that require or that, end up hitting me with a discount, or I have an origination charge, that'll be the variation there. And those are things to really consider because, until, a lot of times when you're running a scenario, this is where where the confusion happens. It's like you have one loan officer you're talking to, and that person's, you know, just kind of giving you an idea of like, hey, look, roughly closing costs are about $3,300. And then you hop on the phone with me, and then me and you're going through a full scenario, and I'm running pricing for you, and you tell me what your credit score is, or I run your credit, and then I give you a scenario where I'm like, hey, look, this is what your closing costs would be, and it's, let's say, higher than that $3,300. That's where the confusion happens, because you're like wondering, why is this guy able to do it for so much less? And the reality of it is that that person hasn't gone far enough into your scenario to really, you know, quote you accurately, or maybe they were just giving you an idea, that rough number of what basic closing costs are. So you just always want to really be thorough with those. You know, if you're a loan officer and you're talking to someone about fees, you want to be thorough about what these fees are, how they can vary from scenario to scenario, you know, what true base fees are, why there will or wouldn't be an origination charge, why there would or will or wouldn't be a discount charge, you know, just so that you're not getting the raw end of a stick because you didn't explain enough to clients. So keep that in mind. But yeah, please, any questions that you have, comment below. As you see, what this does is it goes through and adds up all the fees on one side, and then it breaks down the next section, what they call other costs, adds up all the fees, and then it gives you a total closing cost when it takes D plus I, and it gives you $11,206, gives you your loan amount, subtract the loan amount from subtract the closing costs from the loan amount, subtract the payoffs, you know, the items that we're paying off, the current mortgage that we're paying off, or whatever credit card debt that's being paid off, things like that. Subtract that, and then it gives you the final number of what your actual cash in hand will be. Okay. So once again, any questions you have, let me know. I will likely be doing other variations of this type of video, going over a closing disclosure, detailing a little bit further, you know, trying to provide some info and help you understand this stuff a little bit further. So thanks for tapping in again. Hope you got some good information. 100 Years of Wealth, streamhomeloan.com. Like and subscribe.